Hello everyone, I'm Rob Smith, the Black Quantage VTF here at T3 Live, and this is a special request from my friend Tlazer on Twitter. And if I did this for everybody, I'd be here all night, and I already pretty much am. Just got back from vacation, but I've got two webinars tomorrow and Wednesday at T3 Live and Festival of Traders. I'll be tweeting that out at Rob in the Black, so you can come and join then. And if you're not on Twitter, you can email me, Rob at Smithsintheblack. Anyway, just touching on the scenarios. I don't have a lot of time, obviously, but there's only three things that can happen, right, from one bar to the next. And that's when we use 1, 2, or 3, right? And so if you go back, and let's go back, take Daily Spy back out a while. And the biggest mistake most people make is only using one time frame chart. You need to use multiple time frames, at least 4 for when you're looking at anything. So the only three things that can possibly happen from one bar to the next is here, you can go inside. That's a 1. Couldn't take out the highs nor the lows. That's consolidating, period, right? Couldn't take out the highs or the lows. That's a 1. 2 is you take out one side, right? And so here you can see this was 1, 2 to the upside. Only takes out one side of the previous bar. That's a 2. The third is you take out both sides of the previous range, higher high and lower low. That's all that can possibly happen from one bar to the next, right? And so when you use multiple time frames, you understand what's going on, because a 1 is consolidating, 2 is trending, 3 can be reversing, and then you can use combinations to understand what a reversal looks like, because a reversal can only occur 3 ways, right? And the only way that can occur was the absolute top here, 2, 1, 2, right? That's one way that a reversal can occur, because you go in one direction, you consolidate, and then reverse, all right? The other way that price can reverse is 2, 2. 2 in one direction, 2 in the other. And so here, I'll just go in the weekly. Up in here, you can see how you can start to use that combination, right? So up in here, when we got slaughtered, right here, 2 up, 2 down reversal. You already had your 2, 1, 2 on the daily, right? And so 2 in one direction, 2 in the other, that's another reversal. The other way that the price can reverse is that 2 goes into a 3, right? Because you can't go 3 without taking one side of the bar out, you see? So if we go back to that series of 3s here, it went up and then came back through. So as soon as you go potential 2, potential 3, you got your potential reversal. And you can look for shorter term time frames in here. So you can see the 3 and the 3 here. All right. And so one of the things why you want to use longer term time frames and then break it all the way down is because then you get the big picture of what the big move really looks like. Because when you have something like this, and this is when you get a little more advanced, is that charts are going to present time frame to you the way they're going to present it, right? But it's statistical data. So the chart would look different if it updated at a different time. And by that I mean that even if you have a 30-minute chart, all 30-minute charts start at the top and the bottom of the hour, right? But if you can train your mind to see a 30-minute chart that starts at 15 and 45, you double your signals every day, all right? When you can do that. So in this case, if this was a 2-week chart that updated here, we're still completely a 1 in here, right? Right? Which means that we can expect it to start a new broadening formation series, which is exactly what we got here on the daily. It started over. So most people believe that broadening formations are rare. It's wrong. It's a new broadening formation series. And why that occurs is you need to test ranges, and either you succeed or fail to break out. But if you don't get outside of that big range, any change in continuity you can change. So higher high, lower low, higher high, lower low, higher high, lower low, and lo and behold, back there. There's your giant broadening formation here. And there's a lot more series in here like that. But when you go back out, right, into longer term time frames, you'll see this on the monthly. Here. It did the 2 down and got slammed, came back up, then inside bar 1, 2. Now once again, the mother bar, you have to get outside of this or you can expect the price to reverse, right? So here's 1, 2, but then it 2's back up on here, takes out this side. So now you're coming back up into here. So then another 2 and another 2, and now we're going another 2. We'll reconfirm that with this week. Inside week 1, 2, consolidating, going up. And while that was occurring, this whole series in here, on the weekly in here, it was forming a 1 on the quarterly chart, which we knew about. Here, now you're 1-2 on the quarter, above 279.48, and you're 1-2 up on the week right now. So we want to combine all these time frames, and then we're constantly monitoring time frame continuity. And what that means is that any time that the price is trading above the opening of the month, the week, the day, and the 60-minute. Now, we use quarterly and yearly charts, and then we use sub-60s to even refine the timing. But any time the price is trading above those opening prices, by time and price, the buyers are all taking the offer. They have to be. That's the only way that could occur, right? That's the only way that could occur. Is that a good thing to know? It is, right? Because when people say more buyers than sellers, that's not true. Buying and selling always has to line up. What that means is the buyers are aggressive on all time frames. They're all taking the offer. So when you can find these 2-2 reversals like this that changes continuity back into red, as soon as you can do that, boom, now you've got a reversal and you've got everybody hitting the bid at the same time. It's very powerful. So you want to try and line all that stuff up because that's a good thing when you have the reversal and you have time frame continuity that kicks it back into there. So that's a little brief version. I hope that helps. All right. I'm Rob Smith, and hopefully see you at the webinars this week.